Quick little lesson here on Chapter 9, Lesson 1. This lesson deals with journalizing purchases and using purchases journal according to the title. And they're starting to talk to you about merchandising businesses. And first of all, you have to define what merchandise is. And that happens to be goods that a business purchases and then turns around and sells. A business that actually purchases this stuff and turns around and sells it is a merchandising business. Now, one step further, if this merchandising business sells to someone who's going to either use the product or consume the product, eat it up, then that business is called a retail merchandising business. So merchandising or retail merchandising business would be an example like Walmart. They buy stuff and then they turn around and sell it to us, the consumers. Another type of merchandising business is a wholesale merchandising business. And the one that I can think of that you can relate to is maybe Sam's. Sam's buys in mass quantity, and then they turn around and sell it to consumers. But a lot of times they sell it to businesses. And then they turn around and use that product and make a profit from it. So that's considered a wholesale merchandising business. When a retail business will turn around and buy their product and then turn around and resell it again. They have a little information on corporations in here, and we should probably go over that just a little bit. A corporation, of course, is an organization. They have legal rights just like a person does, but there isn't any specific person's name on the books as an owner, like John Doe Capital or John Doe Drawing. Instead, you'll have ownership through shares of stock. And these people buy the stock. And then the stock is put on the books. Total shares of ownership in a corporation is called capital stock. So instead of owner's capital, we have capital stock. An owner of one or more shares of the corporation is called a stockholder. And if you get enough shares, and usually in the stockholders' bylaws or the corporation's bylaws, they'll say how many shares you have to become a voting shareholder. And that depends on the bylaws. They may or may not have voting rights. It all depends on the corporation and how they set it up. It may have a board of directors that does all the voting. Or, like I said, some stockholders. I know I have some stock in certain things that they will send to me once a year, my voting on certain issues, and I'm going, okay, but I have no clue usually what they mean or what they're about. But I do have voting rights every once a year on those items. And then I have some other stock that, I don't have any voting right. I just have the stock. And someday, hopefully, I'll sell it for more money than what I paid for it and make a profit. Anyway, back to the purchasing and the merchandising business. When they make purchases like that, they're going to use a special journal. Now, when a business is smaller, it usually has a limited amount of transactions, and they can just use a regular journal to keep all the transactions in. But when you become a larger business or a business with a high volume of sales or purchases or other transactions, then you start to want to use special journals to make things go just a little bit smoother, a little bit faster. And the 5 special journals that they're going to be introducing to you is the Purchases Journal. And the only thing that goes in there are purchases for merchandise on account. And we're going to talk about that in just a minute. The second one is Cash Payments Journal, and that's whenever you pay out cash, that's where it's going to go into, is in that journal. Sales Journal, whenever you make a sale of merchandise on account. Now, this does not mean sale of, I should say, backing up, the purchases, it's for merchandise only. Merchandise happens to be something you turn around and sell. It's not the purchase of supplies. Supplies is just an everyday item, and we usually consume it in the office and then have to buy more. It's not for sale, so therefore it's not considered a merchandise item and is not recorded on the Purchases Journal. Cash Receipts Journal is just strictly for when we receive cash, and the General Journal for all the other transactions that don't fit into the other 4 special journals. Next, we will have to figure out cost of merchandise, and of course this is the price that a business pays for the goods that it purchases, then it's going to turn around and sell. When it turns around to sell it, it has to figure out what the selling price will be. And they want to make sure that they use a markup price. And markup is another term that you need to know. It's the amount added to the cost of merchandise to establish a selling price, and it helps obtain a profit. Is it always a profit? No, there's expenses sometimes with selling, so that comes off of there too. But the markup price is how much from the cost of the merchandise to the selling price, the difference there, and that is your markup. Another thing that they're going to talk about is where do you get this merchandise from, and it's from a vendor. Purchases, and I told you I was going to talk about a little more about this. Purchase on account, a transaction in which the merchandise purchased is to be paid for later, is called purchases on account, and this is for merchandise. This is not for simple office supplies or what was the other one? Store supplies. It's basically for items that I'm going to turn around and sell again. That's all purchases are. Whenever you see I purchase merchandise on account, then you know that you bought something to turn around and sell because it was merchandise. Then we use the purchases journal, and the purchases journal has two special amount columns, and it's in the upper right hand corner. One, I'm sorry, but it has two accounts that are on the column. It says purchases debit and accounts payable credit, and we can write the number once and it'll eventually go to two places. And we don't post them, we post it half individually and half not. Accounts payable we will post as a total, and we'll post individually to their individual accounts payable ledger accounts. And purchases debit we'll post as a total. What else do I have to tell you? Or are we at the end? Nope. Also comes with this is a purchases invoice. When a vendor sells merchandise to a buyer, the vendor prepares a form that shows that something was sold, objective evidence, proof that we have a transaction. And this objective evidence is going to be a purchase invoice, and that lists out what was bought and how much it was bought for, and the terms that it's bought, how many days you might have to pay it. Terms of sale, they have down below. View the vendor's terms. An agreement between a buyer and a seller about payment of the merchandise is called a term of sale. And are they going to get into the... Nope, not yet. So I'm not going to tell you about it. Purchases journal. This transaction up on top, it's November 2nd, purchased merchandise on account from Crown Distributing, $2,039. Purchase invoice number 83. So all we have to do is indicate what accounts payable account, which is Crown Distributing, in the account credited column, and then put the total that is due in the purchases debit accounts payable credit column. And that's all there is to it. So, without further ado, they tell you how to post, and we'll get to that. We'll practice that, and that'll be easy enough. Here we go.